Welcome to December 19th, the market update desk. Um, Interesting, last night we got a little bit of help from the Bank of Japan. Thank you, Mr. Ueda, or as Sticks would say, domo arigato. So last night, the market was expecting the Bank of Japan to start to contract or control more their yield control curve. What they came out and said is they're going to be patient with their negative interest rates over the next few months so that they can understand and lay the groundwork for January, February to potentially make some changes to their yield control curve. This was a pleasant surprise to the market because they're going to keep their easing monetary policy. Now, we are also seeing, if we looked at 2023 as a total in the stock market, we're seeing the Magnificent Seven are the lion's share of the total gain for the market. It's quite interesting. So if you look at the weighted increase in all the the Nasdaq, Dow, and S&P, a lot of that gain has been within these Magnificent Seven. So it's gonna be very interesting to see how that goes forward. But those seven stocks are pulling the market upward. As they say, the rising boat or the rising tide rises all boats. So the seven are doing just that. CoreLogic came out and reported that rent prices are now up 2.5% year over year, which is a decrease from last month's report of 2.6, so a tenth less. This reduction in shelter cost is the follow through and the wave that's pushing inflation downward and giving us some better inflation numbers on the CPI, PPI, and PCE reports, bringing us better 10-year bond rates and mortgage rates. We should see that continue to help us out as we go through the first quarter and second quarter of next year. One thing of note that really came out yesterday, you're seeing a increase in the in attacks in the Red Sea in that area. And the response from the United States, Britain, and some of the other combined countries is to try to increase security for shipping along the Red Sea area. Some of the really big companies, BP, Merck, and a couple others, have said they're going to slow down shipments through that area for fear of attacks. This definitely is a concern as we saw WTI crude oil spike yesterday, and we may see some unexpected increases in shipping costs and oil that were not forecasted in because of these attacks. Now, what this does is it flows through to inflation reports, the CPI, PPI, PCE, because oil is a factor of inflation for energy prices, for utilities, and for a number of different things. So we are keeping a close watch on that. Now, housing starts and permits also came out today. Housing starts, the NAHB, I should say, showed housing starts rose almost 15% in November and are on a annualized pace of 1.56 million. Starts are now up 9% year over year. Specifically, single family starts, which is the most important, rose 18% to 1.143 million units on an annualized pace and is up a little over 43% year over year, which is much, much needed. Building permits, which shows our future supply, is actually fell 2.5% to 1.46 million units, although we are up 4% year over year. Single family rose 0.7% in those permits to 976,000 year over year, and that's up about 23% from last year. Completions rose 5% last month, while single family fell within those completions by 3.2%. More demand than supply is going to continue into next year because even though we are seeing these increases in permits, it's still 450 to 550,000 units shy of what demand is with household formations. So this imbalance is going to continue and will make the spring market very, very challenging for buyers. That's why we're telling everybody to get out now. So the builder's confidence component of the NAHB report also came out, showed overall builder confidence rose 3% to 37. While it remains in contraction, we're likely at the bottom part of builders' confidence. Within the report, the subcategories were the current sales index remained at 40, so that was stable. Future expectations rose 6 points in the index to all the way up to 45 from 39. Buyer traffic rose 3% from 21 to 24. Now, the NAHB specifically noted the rise in traffic was attributable to the decrease in rates that we saw over the last 6 weeks, which is fantastic. From a technical analysis, we're at a very important point right now as we're going through the week, waiting to get to Friday's PCE report. Mortgage bonds are testing a very important Fibonacci level at 101.392. So if we can just remain here, we're going to be sitting in a good position as we go forward in the week. But if we lose, if some of the traders take profit off the table, we do have a lot of downward space, almost about 80 basis points. The 10-year bond is sitting at a resistance level of anywhere from 3.95 to 3.76. So it's in a very tight range. Probably going to be pretty static as we go forward into the week and hit the jobless numbers on Thursday, and then the all-important PCE report on Friday. Ultimately, we're likely going to end up the week better than what we started it at, so I think that's fantastic. We'll keep you up to date with information. Hopefully this helps you out. Remember, follow us on Facebook, Instagram, and YouTube. Give us some likes and share if you could. Ask some questions. We're happy to answer them. Give us a call. We can always help. 616-293-2189.